Let's welcome Vinay Jaising from JM Financial Services onto the show. Hi, Vinay. Hope you're feeling good. It's been a great year. Some of the stocks that you've spoken about have done quite well. So it's been a good 2023 for you as well. But tell us, in the last month or so, say the last couple of months, what has been the fresh addition to the portfolio or any position that you'll had which you'll have added on further?
Sure. Thank you so much, for calling us for the show time and again. And, it's been an absolute pleasure, relating with you all. The conviction levels are always tested with, quality questions from your team. So please keep it up. I think stocks which we've been adding, fresh stocks which we've been adding or existing positions have been companies in the consumption space like Fusion and Varun, Fusion Microfinance, Vun Beverages. CapEx cycle is something we are super excited about, and we've been saying this time and again. This seems to be an era, the last 10 years, the Indian government has increased the CapEx by about 5.5 times. Corporate is going to catch up. We hope 2024 is the year for corporate. We like companies, in the water treatment part. We like companies in the, even in the engines part. So companies like Viatech, Wabag, companies like Coil, we've been buying them. They were at 8 times multiples. Now they're between 12 and 14 times multiples respectively. In the large cap space, with the market getting a lot more relatively expensive, we've also increased our flight to quality in companies like telecom, where as we use more and more of the net, as we use more and more of, the data, we're using ARPUs, we're increasing ARPUs for them. So that's where we like companies like Bharti. In the defense field, at one time, we bought a lot of Hindustan Aeronautics. Bharat Electronics is something, which on a catch-up impact we are looking at as well currently. Specialty chemicals, that's something we went very wrong on till 2 to 3 months ago. My analyst Sudarshan has been smiling last couple of weeks. We've got Colin Arkin quite right. Blue Jet's also looking a lot more healthier today than ever before. ER&D is something, phase 1 we got right. Now we're looking at companies like Cyient and Axis Cater. And in autos, we still believe in our healthy Tata Motors story. So a lot in the basket. They're all active risks we are taking, largely based on where we see the earnings trajectory being a lot more rock solid, so that even if, I think the world next year will slow down a lot more than it did last year. You spoke about inflation pain in the last discussion. That was something which went, the world's way in 2023. We're hoping that doesn't create a problem. But courtesy the slowdown in the world, we think India is outshining, and we got to look a lot more at domestic angles, which is why every stock I mentioned to you has a lot more domestic play or make in India play than, a global play.
Vinay, talk to us a little bit more about Vun Beverages. The stock has done well. I think this year itself, it's seen a rally of close to about 77%. Its market capitalization now is in the top 50 in India and much higher than its peers like a Tata Consumer or a Godrej Consumer, Britannia, Dabur. Where from here now for Vun Beverages? It's almost at 1,200 rupees.
Sure. When we started the year, we thought Vun Beverages earnings, this is your analyst Anirudh telling us the earnings should grow at about 15 to 20% on the top line and 15 to 20% on the bottom line, because the company is moving up the water chain. And the company is also increasing its market share in the cola part of it. Now, if you look at the results for the 9 months, have come out. Varun is a calendar year ending company. You've seen the top line grow north of 20%. You've seen the EBITDA grow north of 30%, and you've seen the bottom grow north of 40%. You don't get such companies of this size in the consumer space, which are kind of stalwarts, which grow between the 10 to 15% CAGR. Here you're talking about a company growing still. Let's say 40 is an outlier, but at least growing north of 20 to 25% on the bottom line. So we think as the earnings grow, even if the P is maintained, we're looking at a rock solid 20 to 25% earnings growth in the next 2 to 3 years for the company. It's getting into from being a beverage company to, looking at foods as well. That could give it a lot more fillip in terms of earnings growth. It's one of the most backward integrated companies. So all that gives us a feel good in a market like this. And guess what? You're in festive time. Christmas is around the corner. And this company's utilization rate should relatively be a little more than what it was last year. Clearly, April, May, June are the best months for the company, because that's when, the heat gets on and this company's volume growth gets better. So I really like this company. both in terms of earnings growth and how the management is strategically looking at from going to drinks into newer, smoothies, newer drinks, which they're launching. And more importantly, a probable venture into foods also would help them substantially.
Vinay, hi, afternoon. Just two names. One is Fusion, which you mentioned, and we've discussed in the past as well. We had the management with us, I think, a couple of weeks back, and that the stake sale had happened. But there's a lot more to be sold, which perhaps will happen gradually over next year and the year after. So that will remain. Does that not? Is there a factor at all, or you think? I mean, it's all going to get absorbed easily. Second, if you can talk about chemicals and the names that you own, is this just a tactical kind of up move we're seeing, or are things turning for the chemical space and for good measure? What's your sense?
So firstly on Fusion, clearly the rains which came in northern India, and Fusion gets a lot more of its revenues in the north part of India than the rest of the country. Has led to a relatively slower loan book growth. Our analyst Pooja expected the earnings growth or revenue growth to be as much as 30% earlier on the loan book front, but it was 20 to 25%. And the faith was that now it would be at least for a quarter or two at 20 to 25 before it moved up. What surprised her and us was, with the growth of 20 to 25, the company didn't need to focus as much on its capital adequacy ratio. But the company's capital adequacy ratios are rock solid 25% today, even more than what its loan book could be in the first quarter. So yes, a company which is focused on quality, which is giving you right disclosure levels, warning you if they see a short-term pain, will trade at far higher than 1.5 to 2 times book, which the company is trading at currently. Its ROA is a rock solid 5%. My bet is as the liquidity increases, floating stock increases, the formula of getting into indices and the mid cap or large cap is just about increasing your floating stock. So that story would play well for the company in the months to come. So yes, the more the liquidity for the management, the more it is for investors to look at, as long as the company focuses on doing the right thing, which is high quality loan book growth at the cost of lower NPAs. And if there is a slippage, whatever be the reason, come and tell the world, the market would love it a lot more. So that's really where Fusion fits in. On the chemical side, sorry.
Yeah, go ahead, please.
My apologies. On the chemical side, quick 30 seconds out here. You're seeing China still be a question mark in terms of, what's going to happen next in terms of the growth. But what you're clearly seeing is, courtesy the geopolitical risk increasing, some of the chemical name prices, inching up, and that's where you get the bromine prices moving up, and that's why we like Arkin, a net cash company, trading at 12 to 13 times F25, 26 numbers. You're seeing the commodity price move up, capex behind you. So that's kind of tick the box for us. There's a little bit of pledging of shares which happened for the company, which we are not too happy about. But apart from that, we clearly like the company's strategic initiation to move from bromine to bromine derivatives. Tatva Chintan, again, same story. You're seeing, little bit of CV growth come up in China, and that's going to help them. They are moving into electrolysis, and flame retardants doing pretty well for them. And as you see the commodity price move up tactically, these are the bets which are relatively cheaper than what they were in the past, and which will make us some alpha in the future. Sorry,
right. Okay, no, we'll leave it there, Vinay. Thanks for the explanation, as always, detailed and to the point. Thank you for your time, and it's a great conversation as always. Thanks very much, Vinay, for being here on CNBC TV18. Well, that's the view coming in from JM Financial. 35 points on the Nifty, 21,450.